Today I want to discuss a new stock on the channel. It's a company you've almost certainly heard of, but perhaps never considered as an investment. It's a very interesting turnaround play, but because of its unfavorable history with investors, it is going overlooked and potentially undervalued. Previous turnaround plays that I've personally invested in include Bed Bath & Beyond, which we walked away with about a 50% gain on after it was squeezed. Maxer Technologies we're sitting on about a 50% gain on as well, and Zora, ticker ZEO, which we're slightly positive on and very excited about. Now, I cannot promise today's pick will be quite as successful, but it's worth a shot, so let's do it. What's going on, everybody? My name is Matthew, and today we are talking all things GoPro, ticker GPRO. And if your initial gut reaction is, heck no, I'm not investing in that, it probably means we're on the right track. First, we'll do an overview of the company and its history, then we'll highlight some reasons why I think it could be an attractive investment, and third, we'll cover the risky risks involved. And of course, please smash that like button and subscribe if you are new here, and if you don't want to, then hopefully I can earn it by the end of this video. Alright, let's get started. So it's really no secret that GoPro has made a lot of investors quite upset in the past. The stock is down over 90% from its all-time highs all the way back in 2014. But I like to say every stock chart tells a story, so let's try and understand what this chart is telling us. GoPro is sort of the de facto leader in the action camera industry. Well, actually not de facto, it just is. It's used to capture amazing footage of extreme sports, travel, and literally anything else you need a durable, high-quality camera for. So after its IPO and through most of 2014, GoPro absolutely boomed in stock price, jumping over 140%. So remember, 2014, this is the good year. Then, at the end of 2014 to 2016, the stock craters over 90%. And after that, it's a slow drift even lower. GoPro loses a further 70% plus of value since the end of 2016 until we reach right about the recent market bottom in March 2020. What happens next is the fascinating part, and this is where the opportunities arise. Now, since the March bottom, GoPro has risen by over 270%. Why? Because a global illness and lockdown forced them to change and pivot and innovate on their business model for the better. Because history set them up to be trading so dirt cheap, valuations could only be launched upward by this improvement. So we've broken down this chart into 4 parts. Now let's try and break down what the story is by looking at their financials and behind the scenes. And in this part of the video, I actually want to utilize an Excel plugin that I've personally been using for a few months now. It has saved me countless hours of time. It's called Wise Sheets. Rather than having to go through so many different 10Qs and 10Ks to find the numbers going back several years, Wise Sheets actually lets me look up any ticker and get info on it in their annual or quarterly timeframes within seconds. I do have an affiliate link with Wise Sheets only because I use it myself and they asked, and I used it anyways, so I figured it would be fine. So if you'd like to check it out, support the channel, is linked down below. Alright, so we have the numbers from Wise Sheets. This took, just a few seconds, and I've added some color and a photo for reference to the phases we just talked about. So let's add some context to our story on the stock chart. So you can see this jump to 143% plus was not out of nowhere. They were increasing their revenue significantly from $985 million in 2013 to $1.39 billion in 2014. Their gross profit ratio, or the gross profit margin, was increasing from 36% to almost 45%. Operating expenses, I put that as neutral, but is actually proportionately much better when you look at their operating income margin, jumping from 10% to 13%. And finally, net income pretty much doubled. It actually more than doubled from 2013 to 2014. So that's why we see that jump here. But if we look at 2014, which is this year, into 2015 and into 2016, that's where we see the massive drop off in stock price, right? That 90% drop from its all-time high. And the reason why is because, again, we look at those same metrics that we just analyzed for its jump, it actually got a lot worse, believe it or not, right? So their revenue dropped from $1.6 billion in 2015 to $1.18 billion. Their gross profit margin dropped from 45% to 39%. Their operating expenses significantly increased despite revenue decreasing, right? And that led to a significant drop in their operating margin from 13% to negative 30%. And of course, that leads to a much lower net income from $128 million to negative $419 million. So you can definitely understand why there was a pop and why there was then the drop. if you just look at the financials. But now this is where we want to find that turnaround story where we can now move forward from the bottom and move upwards and hopefully see some appreciation in the stock price. So again, looking at those same metrics, but more recently in the last 3 years. So 2018, 2019, 2020. Again, we have that drop off from 2014 to 2016 still highlighted, but now we can see, revenue, it's kind of plateauing. Not a great year in 2020 for obvious reasons, right? There's not a lot of people traveling or going outside using their GoPro during a global lockdown, but their gross profit margin actually increased from 31% to 35% over the past 3 years. Their operating expenses have been going down, so OPEX is decreasing, which is leading to better operating margins from -7 to a much better year in 2019 to almost even, now just -3%. And again, if you compare 2020's operating margin to 2016's operating margin of -30%, it's 10x better, right? And then there's the net income, which again, 2019 was a bit of a better year, but again, 2020 was obviously a very unique year, and the net income of negative 66 million versus negative 419 million in 2016. And also, if you look at that net income, we break it down by quarter. Again, YSG is giving me the data by quarterly timeframes here. In the past 4 quarters, GoPro has been profitable 3 out of the past 4 quarters. And the year before that, dating back to 2019, September 30th, Q3 of 2019, of those 4 quarters right here, it was only profitable 1 out of 4 quarters. So we have made that improvement as well on profitability, and we can expect them to be somewhat consistently profitable moving forward. But I do want to point out as well, GoPro is a very seasonal company. As you can see, Q4, of course, with Christmas and holidays being a very popular present, Q4 seems to do very, very well, just looking at historical trends. So let's move forward. So now I want to talk about the business model and what changes it's been undergoing over the past couple of years and how that could result in a strong turnaround play. The old GoPro was hardware only, and that was a huge issue because durable goods such as GoPro are usually just purchased once and not purchased again by the same customer until maybe 1 to 3 to 5 years out. GoPro is also selling largely through retail outlets, meaning that on 90% of their GoPro sales, they had to give a cut to whoever actually sold the camera, like Amazon or a retailer in a mall. And this resulted in gross margins in the low 30s. However, in 2020, GoPro was forced to innovate and shift their business model's focus to a subscription service. So this would be able to create recurring revenues for them instead of just relying on one-time sales of hardware, and they increased their direct-to-consumer sales as well to 32% of their sales, meaning that GoPro keeps more of the revenue on those sales. Thus, their gross margin increased to 36% in 2020. And moving forward through 2021, expect to see more app monetization, direct-to-consumer to be greater than 40% of sales, and again, a gross margin of 39 to 40%. And side note, their subscription business is actually on the back of Zora, which is another company that I've invested in, another turnaround play, so go Zora. Now let's dig into some reasons why it could be an attractive investment. For starters, their subscription business, which allows users to have footage automatically edited by artificial intelligence or have their data stored in the cloud, grew 212% year over year to over 1 million subscribers paying a $50 per year subscription. And one way that they're acquiring new subscribers is actually by offering a discount when they purchase the camera, as long as they opt in for the subscription service. And you might be wondering, where are they getting the wiggle room to offer a discount or a lower price? Well, that's the second point. Again, they're going more direct to consumer, which means that they're cutting out the middleman. They no longer have to pay a fee to a retailer or someone like Amazon. So the money they save there by not having to pay a fee to a retailer, they can then kind of pass that on to the consumer in the form of a discount and save them money and give them incentive to sign up for the subscription service, which will ultimately, of course, increase that customer's lifetime value for GoPro. And without the discount in place, another benefit for direct to consumer is of course increasing their margin by just cutting out that middleman. And another compelling thesis highlight is their valuation, of course. So we're looking at a PE of about 26 and a forward PE of 9.56 and forward free cash flow multiple of 10.22. And comparing this to a similar competitor like Garmin, it's relatively attractive at this price. And finally, GoPro has an impressive balance sheet and an impressive ability to generate cash moving forward. Right now, the company has over 300 million in cash and marketable securities on their balance sheet. So if they were to pay off all of their debt on their balance sheet, they'd still have $36 million in cash left over. In other words, they have negative net debt, which is a good thing. And they're expected to generate over $140 million in free cash flow next year. So even if they paid off all their debts completely and added $140 million in free cash flow next year, with that cash, they go on a mergers and acquisition spree. They could give it back to us shareholders in the form of share repurchasing program. There's a lot that they can do with this cash, so it's a really good position for the company to be in. Now, finally, we do have to talk about some risks. The first risk is that we don't actually know the churn rate for their subscription service, which has been a main highlight of the investment thesis. And the reason we don't know is just because the CEO and GoPro hasn't told us. And there is maybe a reason why they haven't told us quite yet, because there was recently a huge jump in subscribers, and with such a jump like that, you may want to wait at least a year or maybe a year and a half to build a solid base of subscribers, because otherwise with such a significant change in the volume of users, the churn rate could look a little wonky. Most investors in GoPro believe that of course the churn rate won't be too bad, but if it is much worse than expected, we could see a nosedive in GoPro stock price, because again, a lot of today's turnaround thesis does hinge on their subscription service. Another risky risk is simply the action cameras industry. If we take a look at our handy tool Google Trends, we can see that searches for GoPro have steadily declined over the past 5 years. This is likely why their hardware sales numbers seem to have plateaued. Now that said, GoPro has been able to charge higher and higher prices for their cameras over time, so it does show that they have staying power and pricing power. So that's up for you to decide. Now make sure to subscribe, because this is an initial research video for GoPro, but it has piqued my interest more than most of the other stocks I've looked at recently, so I'll probably be posting more information on them on this channel. And also check out Investor Community down below, where I post my buys and sells, research, all of that good stuff in real time, and we get weekly lessons from our mentors who are from the finance industry. And again, shout out to Wise Sheets for just saving me so much time when it comes to Excel and importing numbers. And if you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out our quote of the day. You might just learn something. If you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.